Gold keeps glowing. Banking crisis worsens rising value of gold. Global economic uncertainties. In today's volatile economic climate, gold has become a refuge for investors. Issues such as inflation fears, economic stagnation, and geopolitical tensions are driving gold prices higher. Investors are seeking stability in an asset historically known to preserve value. Increased demand. The demand for gold is surging among both individual investors and central banks. Individuals are looking to hedge against economic instability, while central banks are bolstering their reserves with gold to secure national financial stability. Market analysis. Financial experts predict that gold prices will continue to rise. The persistent economic instability and geopolitical risks create a conducive environment for gold to retain and increase its value. This trend is likely to continue as long as uncertainty prevails in the global markets. Banking crisis, severe liquidity issues. The banking sector is facing significant liquidity problems. Banks are struggling to meet their short-term debt obligations, leading to liquidity squeezes. This situation is exacerbated by declining trust in financial institutions. Financial weaknesses. Small and medium-sized banks are particularly vulnerable. These banks often lack the capital reserves necessary to weather financial storms, and poor management practices further compound their risks. The financial health of these banks is a growing concern. Deepening crisis. The banking crisis is deepening, leading to a broader loss of confidence in the financial system. As banks falter, investor trust erodes, creating a ripple effect that impacts the entire economy. This loss of confidence can result in decreased investment and slower economic growth. Economic policies. Central banks' interventions. Central banks have implemented various policies to mitigate economic uncertainties, such as maintaining low interest rates. While these policies aim to stimulate economic activity, they also increase inflationary pressures, which in turn boosts the demand for gold. Government interventions. Government policies aimed at tackling economic crises provide short-term relief, but often fail to address long-term structural problems. Measures such as stimulus packages and bailouts can temporarily stabilize markets, but do not resolve underlying economic weaknesses. Inflationary pressures. The sustained low interest rates and large-scale fiscal interventions are contributing to inflation. As inflation rises, the real returns on investments in traditional assets decrease, making gold a more attractive option for preserving wealth. Investment strategies. Portfolio diversification. Financial experts advise investors to diversify their portfolios to manage risks effectively. Diversification involves spreading investments across various asset classes, including stocks, bonds, real estate, and precious metals like gold, to mitigate potential losses. Long-term investment in gold. Gold is recommended as a long-term investment. Despite short-term price fluctuations, gold has a historical track record of maintaining its value over time. It acts as a hedge against economic instability and currency devaluation. Balanced approach. A balanced investment approach is crucial in uncertain times. While gold offers stability, combining it with other assets can optimize returns and manage risks. This approach ensures that an investor's portfolio is not overly exposed to any single risk factor. Future projections and general commentary. Market trends. The future looks bright for gold as it continues to be a preferred asset during economic turmoil. Analysts expect gold prices to keep rising due to ongoing economic uncertainties and geopolitical tensions. This makes gold a crucial component of a resilient investment strategy. Banking sector reforms. Structural reforms in the banking sector are essential to address the root causes of the current crisis. Short-term measures may provide temporary relief, but comprehensive reforms are necessary to restore long-term stability and confidence in the financial system. Emphasis on caution. The video underscores the importance of exercising caution in turbulent economic times. Investors are encouraged to stay informed and prepared, diversifying their investments to manage risks effectively. Gold as a stabilizing asset. Gold is highlighted as a stabilizing asset in an unstable economy. Its ability to preserve value and act as a hedge against inflation and economic uncertainties makes it a vital part of any investment portfolio. Stay informed, stay prepared, and consider gold for long-term stability in your investment portfolio. Diversify your assets and adopt a balanced approach to secure your financial future.